What's up, YouTube? Welcome back to Stocks by the Numbers. Wanted to dive back into the financial sector. Wanted to take a look at Bank of America Corporation, ticker symbol BAC on the New York Stock Exchange. Now, this company here, 3523, obviously large financial institution. I'm sure you guys are familiar with this one. And it was up about 2.2% here on the day. If we scale out on a one-year chart, you're still down 26.5% if you held for 12 months. Obviously, over 5 years, you're still up 11%. A lot of stocks are actually still down. If you pull up 5-year charts, they're actually down from where they were. But I will say, overall, I have to say, in my opinion, the company does look pretty healthy on paper here. We're looking at a market cap of a little over $280 billion. We have a PE of 11, which of course is pretty attractive, and the stock is paying 2.5% to own it. So you're kind of hitting all bases there. And if we come down here, we look quarterly again, look 23, 22 and a half, 23, 22, 23.6. So they are bouncing up and down, but they're not huge swings from quarter to quarter. You know, they're basically maintaining the same business that they were doing a year ago, which obviously we like to see growth, but, you know, at least being able to maintain the revenue you're bringing in, especially if you're a publicly traded company, is more important than you may think. Now we switch over here and we look annually, and you know, we're seeing 83 billion, 87, 85, down to 74, of course, but that was a rough year for everybody. And then they completely rebounded, posting almost 94 billion in revenue for 2021. Pretty healthy income off of that, also 32 billion. Profit margin north of 34%. Okay, so switching over to TradingView, we can pull up the earnings numbers here, and you can see that they reported 85 cents a share. Estimates were only 77, so a very nice beat there. On the revenue side, 24.53 billion. Estimates were only 24.17 billion, so a good beat on the top and bottom line there. And you know, opened and went down initially at the open, and then spiked up. And now, you know, you see big volume blocks being sold on that spike, and then it slowly started to rise up. So basically, it seemed like all of the financials in the sector in the morning kind of had that volatile swing up and down. But overall, you know, they did begin to slowly climb throughout the day and then maintain their value and basically just trade relatively flat throughout the rest of the afternoon. But we come down here, and I just wanted to show you guys, see quarterly, you can see the profit margin slowly decreasing, right? 28, then it drops to 24, maintains a little below 24. However, look at the revenue growth. You know, it really can't be denied. 24 and a quarter, 24 and a half, 25 billion, 26 billion, almost 30 billion. You know, so you know, and obviously they just posted 24, but you know, it's still impressive the way that, you know, these institutions just are just so consistent with themselves. Whether it's even real money or not, right? We have no idea. But at the end of the day, you know, the numbers that are posted, you can't deny looking at the fact that these are growing, healthy businesses, right? Whether we like it or not. 25.1 billion, 26. So that's what, 51.3, 70, 80. 81 billion, and then they came in with 24 and a half, so you have 105 and a half billion, which, as we see, brings them back to their healthier years, almost touching where they were in 2018 and 2019. So that, in my opinion, is actually a big W for Bank of America. Seeing you know, how much revenue dipped down. You know, I love it. You know, I don't even know why I use Google Finance. You know, I try to use, you know, just general sites like that for all the general people out there who might not be using, you know, specific software or, you know, specific investment or trading sites that the average people don't know about. But yeah, maybe I should stop using Google Finance. I feel like a lot of the numbers aren't even accurate half the time. But again, going to be a good jump here. Right? And I say that because, look, like 2018, 2019, they were over 100 billion. Right? And look, it's showing 85, 80, and, you know, 87 billion. So, you know, I don't know. So I guess we'll stick with TradingView for now. But we pull up the financials, and we can see, if we switch over here annually, the PE ratio a little bit more volatile than we noticed with JP Morgan. Right? And, you know, you're seeing big swings here around 13, 15 up to 19. then down to 9, 12, 16, dropping to 12, now currently sitting at 11. So it does bounce around. I would say it definitely swings a little bit more than JP Morgan. However, again, they are doing good business, and it is a relatively low PE, and they did just beat earnings, and I laid out, again, $105 billion for the year, right, which puts them back on track for where they were a few years back when they were doing better business. So, they're trending in the right direction overall. And basically, this PE, as we see, as high as 19, this can easily climb to like 15. No problem. No problem. So, just keep that in mind moving forward, both in the short term and the long term. We could be dealing with a pretty undervalued situation here. Price to sales 2.66. Looks like it was as low as 2 in the last couple of years, as high as about 4 as of last year, and now it, came down to a little bit more of a realistic ratio there, 2.6. Trading 3.5 times cash flow, which is a very interesting stat, because as we can see here, that is the lowest ratio that we've seen since 2015. So definitely not a bad metric to put on the pro side for Bank of America. And then we come down here, obviously price to book, and look at how cheap this trades. Trading in line with book value, basically getting as high as 1.5 times book value, and now coming back down to 1.1 times book value, right? So we were talking about it, how good JP Morgan Chase may look. I believe it was 1.6 price to book. Now we're sitting here with Bank of America, 1.15 times book value. So, that's really not too bad. You're buying the stock here at roughly 35 and a quarter, and you're telling me that the book value of the company is like $33.5, $34 a share. So, really, if you really think about it, not too much downside. God forbid if this company really goes belly up on you. We switch over here to our profitability ratios and the return on assets. Just like JP Morgan, were relatively low. JP Morgan was maintaining the high decimals going into the 1 and slightly over 1 level. And here you're seeing, as low as 0.7, 0.68, climbing above 1 on multiple occasions. Right now they're sitting at about 0.9%. The return on equity bouncing around from about 6 to 7%, jumping up to 10.5%, getting as high as almost 12% as of last year, and right now sitting back at 10%. So they've maintained that double-digit return on equity, which is definitely another good positive sign. Return on invested capital 3.7 up to 6, bouncing around between 6 and 3 multiple years, now sitting at around 5% return on invested capital. And we look at the operating margin percentage, and you see going from 25% rising straight up to 32, coming back down to 20, up to 35, right? We're making some big swings here with the operating margin percentage, and now it comes down roughly 5 percentage points, and we're sitting here at 29.6% on the operating margin. The net margin we looked at before, and again, high teens, right? Gets up into the 20s. This was a great year for this company, it looks like. But the net profit margin here last year, we'll call it 33.4%, now sitting at 24%. So did take a hit, however, as we see, not as bad as it once was. And you can see, just to show you, look, this was 2015, 16, 17, and then we see what happened in 2018, 2019, right? So even if I switch you back here, look, see, so what were we saying? 2015, 16, 17, right? Percentages were low, and they were gearing up for their breakout years. Look at that jump in revenue, almost 10%. Profit margins and income shot up phenomenally. And then you move over to 2019, and they brought in a little bit more revenue, still retained a decent profit margin, and still made some nice healthy income off of that. So again, that's why. So you can see 21 geared up well. 22 is even better bringing more revenue than 17, but a little less than 18. So that's why, in my opinion, moving forward to the next year, they may potentially, boom, have a jump like this again, going from like the 105 billion that they did in 2022. Now they come in with 112, 115 billion in 2023. You know what I'm saying? So they may be ready to take that next leg higher. And I will be honest, as much as I did like JP Morgan, I think I may like Bank of America a little bit more. If we switch over here to stock charts, we can see big swings, right? They brought it down as low as the mid-Bollinger Band and as high as, what was the high? 35.39, and it sat here and closed just slightly below that. However, it did close above both the 50-day and the 200-day moving average. We have a RSI a little more attractive than JP Morgan on the daily. I believe JP Morgan was 76, Bank of America right here at 64.5. So in the short term, we may have immediate bullish momentum still in our favor, so to speak. We have the MACD, looks like it's still rising here, and if we switch over here quickly to the weekly, we can see that the RSI is sitting at 52. It looks like the 50-day is slightly pulling down, while the 200-day is slightly and slowly rising. So in my opinion, we may have a rejection off of this 50-day here at 35.77, and it's going to come down and potentially tighten in this little range here. I'd say between 33.5 to like 34.5, and then you may potentially have a breakout where it shoots above the 50-day moving average and heads up and continues, see like this top peak and lows and makes higher highs and lows, and now it's going to reject and bounce and make higher highs, right? You see how I got there, kind of? So if this comes, like if we follow this trend, you're looking like right here, which means that, again, this could reject the 50-day moving average potentially, or it could just break right through the moving average and just continuously climb up to $40. But I feel like they may want to bounce it around for a little bit before they immediately give you that breakout. But I do see $40 in the near future here, and even if you're buying shares, you're looking at anywhere from like 13 to 15% profit very quickly, depending on obviously what you can get the cost basis for. And see the tightening, even on the MACD, how it looks like it's going to like flatten out with these small moves and then get ready to take another leg higher, because it does look that way to me. And I just wanted to show you very quickly, switching over here to money.cnn.com, and we move down here, and as you see, top 10 owners of Bank of America, Berkshire Hathaway, holding over 12.5% of the company right now, over 1 billion shares. Oh, excuse me. Over 1 billion shares right now with a value of $38.2 billion. So obviously, Warren Buffett feels very confident in this company, and he's more of a long-term investor, the way I look at it. So, obviously, Buffett is still in Bank of America, and he's in heavily. Vanguard holding 7.15%. They usually are on the right track. I'm sure they have a more successful record than they have failing. BlackRock, of course, as we know, basically like owns everything, and they're always right, and they always basically make money. BlackRock sitting here holding 3.84% of the company. So the top couple of shareholders seem to be pretty big winners. Obviously, Warren Buffett with his massive stake. And also down here, it shows you some of the mutual funds that are holding positions as well. Vanguard, two Vanguard fund, government pension fund holding over 1% of Bank of America right now, so you have some very interesting institutional shareholders right now of this company. And the financials, as we said, the fundamentals seem to be lining up in our favor, both short-term and long-term. So overall, I think in my opinion, we have a winner here with Bank of America. So again, financial companies posting earnings, and they all look pretty healthy. So it basically seems like we might have to just buy them. That's what it's looking like. But I'm going to end it there. So once again, stocks by the numbers. Thank you guys for stopping by. Like the video. Really helps out the algorithm. Helps me get more eyes on the channel. Push the subscribe button if you're not already a member, part of the community that we have here. And if you have any questions, comments, or concerns, drop them down in the comments section. I'm usually very quick to reply. If you would like, you can join my Discord. It's in the description, my personal Discord. There's a handful of us in there having nice back and forths every day. And more importantly, like I always say, I understand markets are rocky and they're volatile, stressful, and uncertain. So I wish everyone success. I hope everyone makes a couple of dollars. I want to thank you for stopping by, and I'll see you guys in the next video. Take care.